Welcome to Breaking News to Trading Moves.
Glad to be here.
So imagine you've got a salesperson, right? And they're listening to every single conversation you have with your friends.
That's a little creepy.
Right, totally. But they're just waiting for the exact second you mention being hungry, just so they can hand you a coupon for a burger right then and there.
Yeah, timing is everything.
Exactly. And that level of targeting, I mean, it's no longer science fiction. It is actually what is driving billions of dollars on Wall Street right now.
Oh, absolutely.
And today, we are looking directly at a specific event. So Reddit recently rallied after delivering a stronger revenue outlook.
Right.
And this growth, it was fueled by AI-powered advertising tools, higher user growth, and, better monetization overall.
Yeah, and I think the central question for you as a listener today is this just a Reddit-specific rebound, or is it a broader trend in digital advertising?
Right, like a larger pattern.
Exactly. A trend where money moves toward platforms that are, combining user intent, community data, AI targeting, and better ad automation all at once.
So our mission today is straightforward. We are taking this headline and strictly looking at the direct winners and losers in the market based on this news.
Just the facts.
Exactly. No exaggerations, just connecting the dots for you. But before we get to the specific companies, I really have to ask you.
Yeah, go for it.
Is the market rewarding the community aspect of Reddit or purely the AI automation aspect?
Well, it's really the combination of the two. You can't have one without the other here.
Okay, how so?
Because community data provides the raw context, right?
Yeah.
It tells you what people are actively talking about, what they want to buy, what problems they're trying to solve.
Right.
But raw data is messy. I mean, historically, a simple keyword scraper might see a user type, this mechanical keyboard is 6.
Oh, yeah, and they take it literally.
Exactly. The old scraper would flag the post for medical or disease-related advertising.
Right, pitching cough syrup to a gamer.
Yeah, exactly. So the AI automation is the engine that actually understands the semantics. It realizes the user is praising a computer accessory, and it instantly matches an advertiser to that exact discussion.
Wow.
Yeah, one without the other just does not generate this kind of revenue outlook.
Okay, well, that brings us right to our first group of clear winners, which are AI-powered social advertising platforms, because the market is really validating this model.
Oh, for sure. Reddit is the direct winner from this news. I mean, the market is rewarding their stronger ad growth, better user monetization, and those specific AI tools that help advertisers place ads inside relevant community discussions.
And if we look at who else benefits from this exact same theme,
We have to look at Meta platforms.
right?
Because advertisers are demanding AI-driven targeting, automated creative tools, and performance-based campaign optimization. And Meta offers exactly that at an enormous scale.
Okay, so for tracking purposes, for those of you listening, we are watching the tickers RDDT for Reddit and META for Meta platforms.
Yep, keep an eye on those.
And to put this in perspective for you, I mean, traditional online ads are like a generic billboard on a highway.
Right.
You drive past it, the advertiser hopes you might want a burger, but they have no idea if you are even hungry.
Yeah, it's just a shot in the dark.
Exactly. But Reddit and Meta's AI-driven ads, they're like that knowledgeable salesperson we talked about. They approach you exactly when you are standing in a store discussing a specific product.
Well, the billboard relies on blind probability, right?
Right.
While the knowledgeable salesperson relies on actual demonstrated intent. And advertisers will always pay a premium for intent.
Oh, obviously.
I mean, Meta has spent billions building an AI infrastructure that acts like that salesperson. It dynamically creates and places ads based on real-time behavior.
And Reddit is doing the same thing now.
Yeah, Reddit is now proving that applying language models to its niche communities yields similar high-performance results for ad buyers.
Wait, so if Reddit's results prove that AI lifts social ad efficiency, does the market automatically give more value to platforms that already have large user bases and strong ad infrastructure in place?
Yes.
Because I imagine, a smaller platform could just buy an off-the-shelf AI tool and compete, right?
Well, no, because buying an off-the-shelf tool does not give you the proprietary data required to train the model.
Oh, right, the data itself.
Exactly. Investors look for companies that can scale a successful model quickly on top of a massive, closed data loop.
Okay, that makes sense.
Look at Meta. They already have billions of daily active users. Their algorithms train on billions of real-time interactions, clicks, hovers, purchases.
A smaller competitor just cannot replicate that training data.
Not a chance. The platforms that already have the massive audience and the technical plumbing in place capture the largest share of those advertising budgets.
Because their AI simply has more material to learn from.
Right. They deploy better tools to monetize the audience they already own.
Okay, but if Reddit and Meta are capturing that intent on their own proprietary apps, what happens to an advertiser who wants to execute this kind of precision across the rest of the open internet?
That is the million-dollar question.
Because that takes us to the technology companies that actually build and power these automated programmatic campaigns, right?
Yeah, because not every brand has the internal engineering to manage this complexity.
Sure.
And frankly, they do not want to restrict their advertising exclusively to walled gardens like social media apps.
They want to be everywhere.
Right. So ad tech companies benefit because Reddit's results prove advertisers will spend more when platforms offer better targeting, measurement, and campaign automation anywhere on the web.
So who are the winners here?
Two names really stand out. First, The Trade Desk, which is highly exposed to programmatic advertising demand.
Yeah.
And second, AppLovin, which investors are rewarding for AI-driven ad performance, specifically in mobile advertising.
Got it. So those tickers are TTD for the Trade Desk
Yeah.
and APP for AppLovin. And I want to propose a concept to you as you listen to this. What we are really talking about is moving from a model of guessing what works to knowing what works through machine learning.
That's a great way to frame it.
Right. Because in the past, an advertiser might guess that putting an ad on a certain website would reach their buyer.
Yeah, purely a guess.
But now the machine learning algorithms actually know it will, because they measure the clicks, the conversions, and the actual return on investment in real time.
And they adjust constantly based on predictive modeling.
How fast are we talking?
Milliseconds. When you load a web page or open a mobile game, an option happens in the milliseconds before the screen renders.
Wow.
Yeah. An algorithm at a company like The Trade Desk evaluates your anonymous profile, calculates the exact probability that you will buy a specific pair of shoes, submits a bid, wins the auction, and serves the ad, all instantly.
And AppLove does this too.
AppLovin does this for mobile developers. They utilize massive amounts of data to predict which user is most likely to download a new app or make an in-app purchase.
So ensuring brands get the highest possible return on their advertising spend.
Exactly.
Okay, so as AI tools keep improving conversion rates and return on ad spend, is the actual product being sold the ad space itself or the machine learning system that guarantees the return?
It is the machine learning system.
Right.
The ad space is becoming entirely commoditized.
Really?
Entirely.
Yeah, think about it from the perspective of the brand spending the money. They do not care if their ad appears on page 3 of a forum or halfway down a mobile game screen or on some local weather blog.
Right, they just want the sale.
Exactly. They care that spending $10 results in $20 of sales.
So the ad space is just the blank canvas.
You got it. The actual value they are purchasing is the algorithm's ability to locate the buyer with absolute precision. That is why companies like The Trade Desk and AppLovin are positioned as winners here. They provide that algorithmic certainty.
Well, supplying that level of certainty requires unbelievable amount of computing power.
Oh, a staggering amount. Right. To run those machine learning systems, evaluate millions of bids per second, and process all that targeting data, massive computational resources are required.
Which points directly to the infrastructure and cloud providers.
Exactly.
Because Reddit's growth is not just about ad revenue. Its large content library of real human conversations is highly valuable in the AI economy.
The actual text of the posts.
Yes, those millions of threads, debates, and product reviews are raw training material for search engines, recommendation systems, and large language models.
And who does that benefit?
This directly benefits the major cloud players, Alphabet, Amazon, and Microsoft. They are seeing rising demand for data processing, AI model development, and ad automation.
Okay, so for those keeping a watch list, the tickers are GOGL for Alphabet, AMZN for Amazon, and MSFT for Microsoft.
Right.
So basically, Reddit is effectively double-dipping here.
Yeah, they really are.
They are winning on the ad front by selling better targeted placements, but they are also acting as a raw material supplier. They are literally selling text conversations for AI development.
They are monetizing both sides of the ledger. Human conversation is the fuel for large language models to understand natural phrasing and logic.
But processing that fuel is not cheap.
Not at all. It requires vast server farms, cooling systems, and specialized microchips. And furthermore, the execution of the ads themselves is compute-heavy.
Right, the auction stuff.
Yeah. When an advertiser uses an AI tool to generate a dynamic ad campaign on Meta or Reddit, That calculation happens on a server in a data center.
And Alphabet, Amazon, and Microsoft own the vast majority of those data centers.
Exactly.
Okay, but if more platforms build AI ad products, does that guarantee cloud and AI infrastructure spending remains permanently strong? Like, since every targeted ad requires constant computing power,
Well, yeah, for the foreseeable future.
could companies figure out how to do this more efficiently and maybe cut cloud costs?
I mean, sure, efficiency improvements will happen, absolutely, but the baseline volume of computation is expanding so rapidly that it creates a very strong floor for demand.
Like, the sheer number of ads.
Yeah, think about it. Serving a traditional static image banner ad takes almost zero computing power. You just load the JPEG file.
Right, super simple.
But dynamically generating a personalized ad unit, querying a real-time database to inject the exact right copy based on user intent, and calculating the option bid all of that requires heavy, ongoing processor utilization.
Wow.
So as more platforms adopt these tools to stay competitive, the physical infrastructure providers collect a toll on almost all of that increased computational traffic.
Okay, so we have covered the winners, the platforms with the data, the ad tech companies building the tools, and the cloud giants powering the math.
Right.
But, advertising budgets are finite. A company only has so much money to spend marketing a new product. So if the money flowing into highly targeted AI-driven platforms is increasing, it has to be pulled away from other areas. We now need to examine who is losing that revenue.
And this is where the pressure really builds on smaller social media platforms.
Okay.
Snap and Pinterest face a serious squeeze if advertisers move more budget toward platforms that show faster AI-driven ad growth and better monetization.
Because Reddit set the bar higher.
Exactly. Reddit's stronger outlook raises investor expectations across the board. If Snap and Pinterest cannot show similar progress in AI ad targeting, user growth, and advertiser returns, they are viewed as weaker competitors.
Okay, so we track those with the tickers SNAP for Snap and PINS for Pinterest.
Yep.
But the pressure isn't just on smaller social networks. We also have to look at traditional digital publishers, right?
Oh, definitely.
Companies like the New York Times Company trading under NYT and Gannett, ticker GCI.
Yeah, traditional publishers face intense competition for ad dollars when advertisers start favoring platforms with stronger targeting, community-level intent, and AI campaign tools.
Because Reddit has those niche communities.
Right. Reddit offers access to niche discussions and interest-based communities, which gives advertisers a clear signal of what the user wants.
And broad display advertising on traditional media sites rarely provides that signal.
Almost never. This puts publishing companies in a very tough spot regarding their digital ad revenue.
I want to introduce a concept here for you listening, which is attention versus intention.
I like that.
Right? Because a traditional news site captures attention. You go there to read about the world, to see what is happening. But a niche Reddit community demonstrates specific intention.
Yes.
For example, if you are in a forum entirely dedicated to mechanical keyboards, you have intention. You are actively researching switches, keycaps, and circuit boards.
You're practically begging to buy something.
Exactly. And for an advertiser selling computer accessories, that intention is incredibly valuable.
While broad display advertising on a news article relies purely on capturing attention, while the reader is focused on something entirely unrelated like a political event or a sports score.
Right. The commercial intent is near zero there. But when that reader is in the mechanical keyboard forum, they are literally asking the community what to buy.
The advertiser does not even have to interrupt them.
No, the ad is highly relevant to the task they are currently performing. So companies that rely heavily on digital advertising without that same level of intention and AI targeting face serious revenue pressure.
So does this mean companies relying heavily on digital broad display advertising without AI targeting will face a permanent drop in ad pricing and growth?
That's the reality they're facing, yeah.
Could they just, I don't know, increase the volume of ads on their pages to make up for the lower prices?
Well, they could try, but increasing ad volume degrades the user experience, which eventually drives readers away completely.
Oh, right. The site just becomes unusable.
Exactly. The core issue is the math behind return on ad spend. If a marketing department has a limited budget, and they clearly see that a dollar spent on an intent-driven, AI-optimized platform yields a measurable return of $3.
They naturally move money away from broad display ads. Right, where the return is harder to track or just lower overall. To maintain their ad revenue, traditional publishers either have to drop their prices to remain competitive, or they must find a way to offer more precise targeting.
And without that precision, it becomes very difficult to justify premium ad pricing.
Very difficult.
But the budget cuts aren't just hitting text and image-based publishers.
No, they're spreading.
Right. We need to connect this directly to video budgets where performance marketing is beating general brand awareness. And this brings us to streaming and connected TV ad platforms.
Streaming and connected TV platforms are fighting for these exact same advertiser budgets.
Like who?
Well, Roku, Paramount Global, and Warner Bros. Discovery.
Oh.
They all rely heavily on advertising revenue to offset the high costs of content production.
Right.
But as brands move money toward AI-powered social platforms that offer lower friction, better targeting, and more measurable performance ad-supported streaming companies face much tougher competition.
Okay. Tickers for this group are ROKU for Roku, PARA for Paramount Global, and WBD for Warner Bros. Discovery.
Yeah?
And this really questions the old industry wisdom because for decades, the assumption was that television-style video ads are the premium tier.
The Holy Grail.
Yeah. The gold standard of advertising was a 30-second spot during a popular show.
And that was true when brand awareness was the primary goal, and when marketers could not easily track direct sales.
Right.
Television ads are fantastic for making people aware your brand exists. However, we operate in an environment where companies demand immediate measurable performance.
They want a user to see the ad, click it, and buy the product immediately.
Yes, and social and community platforms offer that low-friction path to purchase. You hold your phone, you see the ad, you tap the screen, and the transaction is complete within the same application.
While connected TV has a friction problem.
A huge one.
Right, you sit on your couch, watching a show on Roku or Paramount. An ad plays. Even if it is a great ad, you have to pick up a different device, open a browser, search for the product, navigate to the website, and then enter your payment details.
It's exhausting just saying it.
Exactly. The gap between seeing the ad and making the purchase is extremely wide. It's like a leaky sales funnel where you lose potential buyers at every single step.
And because that gap is wider, it is much harder for the advertiser to prove that the television ad actually caused the sale.
Oh, the attribution.
Exactly. This is called attribution loss. If you search for the product on your phone 3 days after seeing the ad on your TV, the streaming platform rarely gets the credit for that sale.
But with AI-driven social ads, the attribution is nearly flawless.
Perfect. The algorithm tracks the exact moment the user saw the ad, clicked the link, and completed the checkout. Investors compare the ad growth of streaming platforms against the faster-moving digital platforms, and the difference in measurable performance becomes very clear.
So if a brand can get highly measurable, AI-optimized performance from a social ad, will investors start punishing streaming platforms whose ad growth looks sluggish by comparison?
Absolutely. Pragmatic investors follow the growth.
Right.
If the data shows that advertising dollars are migrating toward performance-based platforms with tight attribution, investors naturally adjust the valuation multiples they're willing to assign to traditional streaming ad models.
So they get valued lower?
Exactly. Unless streaming companies develop highly interactive, shoppable video ads that rival the conversion rates of social platforms, their ad revenue growth likely looks sluggish compared to the AI-optimized players.
They are competing for the exact same marketing dollar, but offering a product that is just harder to measure.
That's the bottom line.
Okay, let's summarize the clear dividing line the market is drawing based on this Reddit news.
Good idea.
Companies that can combine user intent with AI automation like Reddit, Meta, and the ad tech and cloud infrastructure companies behind them are winning the ad budgets.
Clear winners.
And on the other side of the line, traditional, broad-targeted platforms, smaller social networks falling behind in the AI race, and streaming services are feeling the squeeze as performance marketing takes priority over general brand awareness.
It is a profound reorganization of how commercial dollars are allocated on the internet.
Truly.
And it leaves us with a provocative thought to ponder for you listening. We discussed how algorithms are moving from guessing to knowing based on community data.
Right.
If AI eventually allows platforms to perfectly predict what you want to buy, based purely on the anonymous collective chatter of online communities, does the traditional advertising concept of a target demographic like age, gender, or location disappear entirely in favor of real-time intent tracking?
Wow, yeah, that is exactly the kind of question this news brings to the surface. Please remember, this is not financial advice or buy or sell recommendations. This is purely the opinion of the author.